Well, joining me now with more is Giancarlo. He is the former CFTC chair and current senior counsel and co-chair of Willkie Digital Works. You might also know him as the crypto dad. Chris, welcome. It's good to see you.
Great to be with you, Kristen. It's actually great to be here at the New York Stock Exchange. I spent most of my career just down the block at 100 Wall Street, so it's like coming home to be here today.
We're so happy to have you, and you have such a wealth of knowledge that we want to tap for our viewers, of course, live streaming on X and other places as well. The digital asset space, Bitcoin surpassing $100,000 a token. What does Bitcoin and the digital asset space look like under a new administration?
Well, it's interesting that you mentioned the jump in Bitcoin from $67,000 or so on election day to where it is now hovering around 100,000. I actually think there's something going on there that perhaps viewers haven't heard before, and that is the recognition that actually Bitcoin may be ending its early immature phase, what some people call derisively as the casino phase, into a new phase of maturity and mainstream adoption. And the reason for that is, under Biden administration policies, traditional financial players have been kept out of the space. They've been warned to stay out of the space because of the debanking of traditional firms and because of the SEC's warning lawyers and others not to get involved in crypto. And we've seen that now through FOIA requests that have been forward that the FDIC actually warned banks to stay out. All of that is going to be taken away. Trump is going to allow traditional finance to move into the digital asset space. And I think we're going to now see the institutional development of this asset class. Major American financial houses, whether it be the New York Stock Exchange and its owner, ICE, NASDAQ, others, as well as major Wall Street firms, are going to move in a big way. And I think that's going to bring us a real maturization of digital assets. And I think the value proposition now is going to increase dramatically. And I think early investors are seeing that.
Yeah, I am curious to know, Chris, on that front, what does that mean for the price of Bitcoin?
I think we're going to see the price of Bitcoin continue. Well, I'm not a prognosticator, and I would never give investment advice, especially as a former regulator. But when the United States and the Trump administration talks about a strategic Bitcoin reserve, other countries will follow as well. When you've got national governments buying and holding crypto, I think that is going to lead to invariably rise in price. You know, when you have a fixed supply commodity, which is what Bitcoin is, demand can only be met with one thing, an increase in price. If you can't increase supply, only price can increase. So I think you might naturally see a commodity like this rise in price.
What does that mean for gold?
It's interesting that gold hasn't seen a similar rise. You know, gold traditionally, when currency was debased, it was always traditionally good for gold. In an analog world, what gold was to fiat currency, we might find in a new digital world, a digital commodity like Bitcoin is, as we continue, unfortunately, to debase our dollar with the money printing that's been going on over the last decade. I think Bitcoin has benefited from that. And sadly, if we continue to debase our currency, we may find Bitcoin to continue to benefit from that.
Paul Atkins tapped to be the crypto czar for the new administration. What does he bring to the table?
So I've known Paul since we were classmates at Vanderbilt Law School back in the early 1980s. Paul's a dear friend. He's a very serious thinker. Paul is at heart a free market a libertarian. Paul believes we need to use our financial regulatory scheme to further capital formation. He wants to get down to the basics of the SEC's role to further more IPOs, more liquid markets, deep and liquid, and focus on how the SEC can facilitate innovations coming to market and raising capital. So I think we're going to see an explosion of American markets under the leadership of Paul Atkins at the Securities and Exchange Commission.
I want to talk more about financial markets broadly. Of course, we focused on the digital asset space. Scott Bessent, another key player, of course, Trump's pick for Treasury Secretary. What does that mean for financial markets more broadly?
You know, the first Trump administration was known for its very forward-leaning and sophisticated financial regulators. I was recently talking with Andrew Bailey, the governor of the Bank of England, and he said to me that during the first Trump administration, he had been in public life 40 years himself, he said it was one of the best financial teams he's ever seen out of Washington. I see Trump now doing the same thing. The pick of Scott Bessent, the pick of Paul Atkins, indicates to me that Trump is really looking for the best quality financial regulator team he can put together, and I'm very hopeful that he will do that.
What changes in the regulatory landscape under a new administration?
Well, so the first step is to undo bad policy. We've had some bad policy, certainly with regard to digital assets. I mentioned the debanking of the digital asset space, but also activities by the SEC, regulation by enforcement. Instead of actually writing rules for this new innovation, they've sued companies, or if they haven't sued them, they've just issued what's called Wells notices to stop companies in their tracks. We've got to get rid of that bad policy day one. Day two is to deliver on some of Trump's digital asset promises, a strategic reserve, a crypto council, and perhaps a capital gains relief for digital asset transactions. Then thirdly, to get to the actual policy making, we need to get FIT 21, that is Fit for the 21st Century Act, which was a law that passed the lower house, the House of Representatives, but not the Senate. We've got to get that passed. That will work out the differentiation between what is regulated by the CFTC, my former agency, and what is regulated by the SEC. And we've got to get stablecoin legislation done, and we've got to get good rules and regulations out of both agencies. If we get that, we'll have achieved some very good policy, I hope, for the rest of the 21st century, to allow the United States to truly become the digital asset capital of the world.
Chris Giancarlo, former CFTC chair, currently senior counsel and co-chair of Willkie Digital Works. Chris, thank you so much for joining in studio.
Great to be with you.
Great to see you.